Beyonce suing the IRS. After a recent tax audit that found that Beyonce owes over $2 million in taxes and penalties, she wasn't too happy about that. So she decided to take the issue to court. Today, I'm going to review the facts of the case and pull out any teachable moments so that you can use this knowledge to, one, avoid situations like this. And if you do wind up in tax court, you can figure out ways to get yourself out of this situation. Hi, everybody. I'm Kamari Ellis. I'm the chief tax problem solver at the Philly Tax Team. I've been in the tax and financial service industry for over 25 years. This whole channel is dedicated to helping you leverage the tax code and to use the tax code to help yourself build wealth for yourself, your family, and your community. So Beyonce got audited by the IRS. She does not agree with the ruling, and she said, hey, I'm going to take y'all to court. This is actually fascinating to me because it's rare that you actually get a chance to get into a total glimpse of what people go through in their businesses, and it's an opportunity to show you and teach you how not to go through these things, or at least how to most likely avoid these type of situations. The IRS audited Beyonce in 2022 for her 2018 and 2019 personal tax returns. That IRS audit resulted in Beyonce owing a little bit under $3 million in taxes, penalty, and interest. Now, I wanted to review this case because in this petition that Beyonce and her lawyer filed, they shared some of the original IRS audit documentation, and we can go through this so we get a good bird's eye view of what's going on with this case. So I just want to look at this real quick. So this is the petition sent by Beyonce and her lawyer. They submitted it on April 17, 2023. And as it shows, Beyonce's Noel Carter versus Commissioner of Internal Revenue. So it says here, Beyonce knows hereby petitions for the redetermination of the deficiency set forth by the Commissioner of Internal Revenue and the notice of deficiency dated January 18, 2023, and is the basis for her case alleges as following. Now, this is really, really lengthy. I'm going to kind of skip over this, and I want to go right to the issues that they want to challenge. And all of that is here. So there's a lot of issues here. It looks like Beyonce files a Schedule C. She's a regular sole proprietor in her business. So, you know, Beyonce is a performer. That's going to be a key thing. Remember that fact as we go through this. But she's a performer. Y'all know Beyonce does a lot of performances, commercials, royalties from her things, selling things, and so forth and so on. All right, so this is the letter that Beyonce received from the IRS. All right, Department of Treasury, Internal Revenue Service, Small Business and Self-Employed Department. Now, I want you to remember, the IRS will never usually call you or email you. They usually send letters. 99.999% of the times they send letters, all right? And so they sent this to her January 18, 2023, and they gave her a time to respond, which is April 18, 2023, all right? Keep that in mind as well. So this is the letter. This is the results that came back from Beyonce's audit. So here it shows notice of deficiency, right? $805,850,000 for 2018, penalties of $161,170 again in 2018. Now for the 2019 period, she has a deficiency in tax, meaning she didn't pay enough in tax, of $1.4 million. I'm not going to read the whole thing, right? Then she also has penalties for $288,000, right? So that's a lot of money, which means Beyonce also makes a lot of money. So anytime you're making a lot of money, your tax bill is going to typically be high. But I get why she's contesting this, because no matter how rich you are, that's a lot of money. Now, I want to bring this to your attention, just in case you ever go through this. If you ever go through an audit and the IRS sends you a letter, you have 90 days to respond to the letter. Now, if you're international, you have 150 days, but that 90-day time period is crucial. You do not want to miss it if you want to appeal. Now, if you agree with the audit and you don't want to do anything, then you can just leave it be and everything will fly through smoothly. But just remember that 90 days is a crucial time. Okay, so this is the notice of deficiency waiver, basically telling the IRS that you agree with it, you can sign it and send it back. And so I believe this is her accountant that worked with her on this issue, Edwin Niche or Nice. He's out of New York. Also, another thing, interest on deficiencies. Interest on deficiencies will accrue from the due date of the return until paid. And these are just all of the forms that and all of the penalties that she's subject to. Now, one is saying substantial negligence. Usually that happens when there's a 25% error on your tax return. And this was also reviewed and signed over by an IRS group manager. So it's not just some individual agent saying, hey, we don't like this, but it's also someone who's reviewing this and giving the approval. So now here's the date, July 7th, 2022. All right, so report of income tax examination changes. This is where all the juice is. This is where a lot of the fun stuff happens. So here it's saying adjustments to income at the top. Schedule E2, royalties received. So Beyonce might have not reported something here. They're saying, hey, we found income that you didn't report on your initial tax return, $1,449. All right. They're also looking at other expenses that were reported, and it looks like this was roughly $761,000. So they're saying we don't like that either. $473,000 in legal fees. We don't like that either. There was something missing there for at least $11,000. I believe that's $11,000 in self-employment tax. So anytime you are a Schedule C employee, not Schedule C employee, Schedule C business owner, you're a sole proprietor, and the IRS and Congress wants you to pay your portion of your Social Security and Medicare tax, and they do that through SE or self-employment tax. So the self-employment tax is roughly 15.3%. Again, that goes in towards Medicare and Social Security. And they're saying that figure was wrong. Okay. Then itemized deductions is roughly $860,000. They're saying that needs to be added back. Qualified business income deduction, $3,581. Also added back. So keep that in mind. These are the figures that are being discussed and examined. And this is for tax year 2018. So that's a little under $2,100, little under 2.1 million. Same thing on this right side. This is for tax year 2019, where you have a change in other expenses, $14, a change in, a change in QBI, qualified income deduction, $14, qualified for other expenses of $2,800. Now, usually people put other expenses there, things that are kind of miscellaneous, small, maybe might not be categorized or unable to categorize, but they are good or not good. They are key to running your business. They will be considered normal and necessary things by the IRS. So the IRS is basically disagreeing with all of these things. Utilities, $11,948, little under $12,000. Taxes, $54,000, almost $55,000. Management fees, $24,691. Insurance, $33,000. Right? Depreciation. Now, what is depreciation? Depreciation is when a taxpayer buys an asset that they want to write off. But when you have depreciation, or they have capital assets or big equipment like buildings, trucks, machines, the IRS says, hey, you normally cannot write this off in the first year that you buy it. It's an asset, so you got to stretch out the deduction of that over many, many years, or the useful life of this asset. So they wrote off a couple of things, or they disallowed a couple of things in this audit. One for almost $76,000. Another for $3.3 million of deduction that she wrote off. All right. Now, a lot of this return is redacted. So filing status isn't there, but you could probably guess, since it's just Beyonce on this, her and Jay-Z are not filing together. It looks like they redacted or blacked out foreign tax credit, general tax credit, all of those things. And so here, as you go through it, it's saying that the balance due for 2018 is 805, which I talked about earlier, and the balance due for 2019 is 1.4 million. All right. Then that's the accuracy related penalty. Now, so I want to go through here and talk about why the IRS said that these things are not going to work. So now I want to go through why the IRS said that these things don't work for them, don't fly for them. Because again, a lot of you all have questions about taxes, especially my business owners and investors, not sure what to do. This is going to help you all figure out exactly what to do. So it says your 2018 revised report supersedes report issued on March 14, 2022. Total passive activity loss carryover from total passive activity loss carry over from tax year ending in 12/31/2019 equals 4,632,000. Please see attached 8582 and related worksheets. All right, so they're going through all this stuff with a fine-tooth comb. Now, this is the examiner, Sophia Wong. She's out of the Woodland Hills office in California. And again, this was done on July 7, 2022. Now, this is where it gets interesting. Qualified business income deduction. Now, I want to talk real quick about that. Before we get into it anymore, I want to talk about that. So I want to talk about QBI real quick, all right, or qualified business income deduction, QBID, as many people say. All right, so I'm going to pull up something from the IRS. I'm going to pull up facts about the qualified business income deduction. All right, so pay attention to this. Many individuals, including owners of businesses operated through sole proprietorships, which Beyonce is a sole proprietorship, partnerships as corporations, trusts, and estates, may be eligible for a qualified business income deduction, also called the Section 190A deduction. Some trusts and estates may also claim the deduction directly. Now, just to kind of shortcut this, because I don't want to be here all night, and I know you don't want to be bored to death by this. Typically, if you have a qualified business, you can get a 20% tax deduction for QBI, 20% off of your revenue for QBI. This is one of the things that Donald Trump pushed through with the Tax Jobs and Cuts Act, or TJCA, as you know, affectionately spoken, because we always have these acronyms. The deduction is available for tax years beginning in 2017. Eligible taxpayers can claim it for the first time on their 2018 tax returns filed in 2019. All right, keep that in mind. That's important. Now, again, I'm going to spare y'all all the technicals. I want to show you this, though. For anybody that's doing QBI or any business owner that's looking at this, you have to look at what's considered a qualified trade or business. So I'm going to read this here. A qualified trade or business is any Section 162 trade or business with three exceptions. A qualified trader. All right, so these are the three exceptions. A trade or business conducted by a C corporation. So we know this doesn't qualify for Beyonce because she's a what? Sole proprietorship. All right, number two, for partnerships with taxable income that exceeds the threshold amount, specified service trades or businesses. An SSTB is a trade or business involving the performance of services in the field of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, investing, investment management, trading, detailing in certain assets, or any trade or business principal asset in the reputation or service of one or more of its employees or owners. Right, you heard that right? Performing arts. The principal asset of a trade or business is a reputation or skill of its employees or owners if the trade or business consists of the receipts of income from endorsing products or services. Endorsing products or services, right? The use of its individual's image, likeness, voice, or other symbols associated with the individual's identity or performance at events or on radio, television, or other media outlets. What do we think here, folks? All right. For 2018, the threshold amount is $315,000 for a married couple filing jointly. We know by looking at this, Beyonce does not file jointly, and $157,500 for all other taxpayers. The STP limitations don't apply for taxpayers with taxable income at or below those levels. So what that means is if your income is below those levels, some of the STB things don't apply to you. You can still potentially get QBI. However, this is Beyonce. We are Queen Bee on Beyonce's internet right now. We know she makes more than $157,000 a year. So those things definitely would apply to her. All right, so I want to get back to some of the other things that we were reviewing in that deficiency notice. All right, so we know the QBI tax deduction, if we're just looking at the rules, more than likely is out the window. So the IRS is probably correct on that. Now, so again, like I said, QBI is out the window, more than likely. I don't see how the auditors at the IRS would deal with this. And more than likely, the tax courts will probably side with the IRS because that's just a rule. That's just the law. All right, so here, royalties received. They're disputing this. On the tax return, it listed $11. Per the examination, they got $1,460. Now, what happens is a lot of times the IRS will get other documentation from people that pay you. So more than likely, she got some kind of 1099 for a royalty payment. It was submitted to the IRS. Beyonce or the tax accountant missed it, and it got flagged in the audit. Now, what did I just tell you? The reason why this was missed or adjusted, we have adjusted your income to include the amount shown on Form 1099 MIS, 1099 miscellaneous. So that money was paid out per some other company that works with Beyonce. They stated that they paid her. Now that could happen. That could be an innocent mistake. Other expenses, right? This is listed on her Schedule C for 2018. On her return, she has $790,000. Per the examination, when the examiner goes through and looks, they can only substantiate, ascertain, figure out that they had $29,000, $29,458. So they adjusted that down. They got rid of that $790,000 expense, and they got rid of it. So reduced it by $761,000. So they only reported, the examiner is only going to accept $29,458, right? Examiner's explanation: since you did not establish the business expense shown on your tax return was paid or incurred during the taxable year, and that the expense was ordinary necessary to your business, we have disallowed the amount shown. All right, same thing for legal and professional expenses, right? That was a whopping $1.1 million. The deduction has been adjusted to the amount verified, right? So when I always talk to my clients and I tell people, make sure your books are in order, the IRS said you only have $677,000 of legal and professional service that we can substantiate, right? That we can prove. So that just got rid of another $473,000 in expenses. So that hurts. Now, in 2018, Beyonce reported $868,000 in charitable givings carryover. So this was supposed to come over from her 2017 return. The examiner gave her a zero, right? So that's a big whammy right there as well. Now, again, as we go through these, a lot of them are for the same thing: statutory SC adjustment. I kind of went over that On the tax return, it says zero, right? That there's no self-employment tax there because they're saying there was no profit there. That's the only way a Schedule C taxpayer would have zero on their tax return for SCI adjustment with zero. They didn't do anything, right? So again, the examiner says your self-employment tax has changed as a result of adjustments made to your net earnings from self-employment, as shown in this report. Now, the statutory self-employment tax, again, reported zero. Now, here is saying that she was due to pay $22,632. That's because she had profit on her tax return. Now, give me 1 second. This is something that just came to mind that I didn't pick up before when I was looking at this. So if she had profits or if she had self-employment tax of $22,632, normally, I told you that that tax is 15.8%. So if we go back and we add, let me pull out my trusty calculator and let's see what this will be. All right, so I just discovered something, right? All right, so something just came to mind as I was going through this while I was prepping for this video, right? That number right there kind of gives us a clue onto what Beyonce's Schedule C income is. So let me put this in the handy dandy Googles. All right, so let's plug this into the handy dandy Googles. So we're going to backdoor this thing, reverse engineer this thing. And so let's look at it. So she owed $22,632, right? Let's divide that by 0.153 because that's 15%. And let's see. So that backs into $147,921.56. So let's just say $150,000. So that's what Beyonce is saying, or excuse me, that's what the IRS is saying that Beyonce's income for this Schedule C is giving. That's the issue. Now, she potentially could have multiple Schedule Cs. This is just for that one issue. So Beyonce made roughly $150,000 for this issue. That's the issue that we're dealing with here. So let's go back and look at the rest of the report from the IRS. All right. We have adjusted your self-employment tax due to the change in your net earnings from self-employment. Net earnings, net sales, net profits, that means you made some money. We see that you made some money, so we're going to adjust your taxes. That was for 2018. Now for 2019, they're changing something on other expenses on the Schedule E. They put down, now the Schedule E normally is for royalty. They put down that they had $9,801 in other expenses. Per the exam said zero. Why? Why is the exam disallowing all of this or just throwing it out the window? We have disallowed the amount shown on your return because you did not furnish information needed to support the claim deduction, right? Utilities for tax year 2019, $11,948. Examiner says zero. We have disallowed the amount shown on your check on your return because you did not furnish information needed to support the claim deduction. Listen, I keep telling y'all, when you go through an IRS audit, it can be heavy. They want to see everything. They're going through everything. So when you prepare a tax return, make sure that is honest, truthful, ethical, so that if by chance you ever have to experience an IRS audit, you have everything glowing. Everything is there. You can just print out a return, give them your QuickBooks files, give them, whatever software you use for bookkeeping, give them those files and they can see it, and they can match, and they can say, it's either good or it's not. In the case of Beyonce, it's not good. So utilities, disallowed. They put down taxes, which is kind of weird, disallowed. Management fees, again, almost $25,000 disallowed. We have disallowed the amount shown on your return because you did not furnish information needed to support the claim documentation. Excuse me, the claim deduction. All right, as we keep going down, insurance. In 2019, Beyonce is stating $33,301. IRS is saying, nah, bro, we can't do it. Since you did not establish that amount shown was A, insurance expense, B, paid, the amount is not deductible. They couldn't prove it. They couldn't prove it. Depreciation expense. Now, this one is actually very fascinating. Well, it's all fascinating. Since you did not establish the cost or other basis of the assets, and B, that it was depreciable, no depreciation is allowed. Gone. Depreciation expense, again, $3,300,000. They're taking an expense claim for depreciation for $3,300,000. Let's 3.3, because I'll read this whole thing because that's just how my technical brain works. Tax examiner says no, we're not going to be able to do this. Since you did not establish A, the cost or other basis, meaning what they paid for it, how much they put into a thing, and that it is not depreciable, no depreciation is allowed. So again, it's not seems, but every time there's something challenged, there hasn't been any type of claim, no way to substantiate it. And so you gotta wonder what was their bookkeeper, tax accountant, tax attorney doing throughout all this, right? So that's kind of the basis for this whole thing with the IRS. Again, an IRS audit can happen a couple of different ways. You can draw some red flags, like you can claim some things that tips the IRS off and say, hey, this is pretty big. I don't know if this is accurate. Let's pull their file. Let's go through the tax returns and let's see what's popping. 2, a person can pull an IRS audit randomly. They'll just pick a number out of the hat and they'll say, your last name starts with C. We're working on C's this month. We're going to audit you. Now, in this audit, right, that Beyonce's experience, or what did experience, you would think his name is Edward Niche, or Niche, not sure exactly how to say it. But right there, that's listing his name. And as you go further down into this, it shows he's a CPA. So he should be qualified enough to handle this. Edward Nice, he's a CPA. So I would think he would do something a little bit different in this audit. Now, I don't know if maybe the auditor, the examiner who reviewed this didn't like what they got, and it was provided and it didn't happen. And that's why this court issue is happening. But normally that's not how it works. And normally if you are having an issue with, now, you would think that the CPA on the job would have provided substantiation for all of the claims. Normally when you go for an IRS audit, when you're able to substantiate the claims, prove the claims, this all goes away. And there would have been no notice of deficiency, at least not to this magnitude. And you see in some of these issues when it came to some of the accuracy penalties that had to be reviewed by a group manager. So again, it's not just a low-level employee doing this, it's going up to the manager level. And they know this case is going to be a high-profile case. So they're like, hey, we're going to look over this with a fine-tooth comb, so we're not found liable or being heavy-handed in the situation. At least that's what I believe. So again, we looked at the case. We're looking at the audit. All of these things are an issue. These are all the things that are issued that the lawyer is looking to challenge in this tax court case. All of the things that are written off and disallowed, they want to say, hey, those are legitimate. By law, we want them back because we don't want Beyonce paying this almost $3 million tax bill. So the strategy for me going into court would be, hey, here's the proof. Here's the bookkeeping records. Here are the documentation. Here is the canceled checks or the cashier's checks, the wires, whatever to show that these items were indeed paid for. They are indeed normal and necessary for their business, for Beyonce's business to operate normally and successfully, and that this should all be overturned. Now, I have to ask myself when looking at this, why did this even get to this state? Normally, before something gets to tax court, like we've been talking about, there's another phase, there's another process there. You go through the audit phase, right? The examination phase. So the IRS examines it, and then, they kind of go back and forth. You can appeal this, right? So there's level steps. There's several levels to this before it even gets to tax court. I'm assuming whoever Beyonce's representative was, they exhausted all these steps, so they could either come to a resolve, possibly some settlement, and that clearly didn't work. Also, it's got to be noted, sometimes it is a strategy for people to just go straight to tax court. It freezes a lot of things, and that is a strategy for a lot of people because, again, a lot of times, most of the times, these things are settled. They usually don't get to full-fledged verdicts in many of these trials. Again, however, every situation is going to be different. Personal finance is personal. Tax accounting is personal. So we can only guess why Beyonce and her representatives chose the route that they went. Now, getting to court, what are they going to want? As I said previously, documentation and records. They had to prove, substantiate that these indeed were real things. Now, as we talked about before, the QBI deduction more than likely is gone. The royalty income was probably wrong. For whatever reason, it was missed. So they have their one chance to fight and have a leg to stand on will be able to show that they have good bookkeeping. But again, you would have think they would have done that in the actual audit instead of wasting time, energy, and money before they go to tax court. So with all that said, these are the learning lessons here. These are the teachable moments. When you do a tax return, make sure it's accurate. Make sure that either you have it or your tax professional has all your tax information, your 1099s, your W-2s, your mortgage statements. If you have children in college, their college tuition statements, their interest statements, their stock trading statements, anything if you sold an asset or not. If you have any dividends, have all of those statements so you or your tax professional can properly process these things. Again, it seems like some of these things were missed, especially that 1099 miscellaneous. That could have been the red flag that said, hey, this was flagged. Plus, we have some of these other things that were overlooked or kind of high, and they can't prove these things. And that's why they ruled in the way that they did. So when you get your taxes done, make sure everything is accurate as possible. 2, make sure you have good books. I know that first point might kind of seem the same thing as the second, but they're not. So when you're a business owner, you need to have good books. You need to have a bookkeeping system, in my opinion. You can always use a black and white notebook, but in case you run into an audit like this, you need a system where you can go push the button and say, give me a report. Oftentimes the IRS examiner will want to see the files from like a QuickBooks that's not an endorsement or an ad, or some of the other some of the other bookkeeping software that's out there. They look at that stuff, they examine those things. So you want to make sure that they're done right, because at the end of the day, those folks know what they're doing. So you want to make sure your bookkeeping is in order. Last point number 3, when hiring a professional, right, whether it's for your tax preparation, tax strategy, hiring somebody to handle your IRS tax debt, you want to make sure that they're competent, that they can handle this type of situation in this area, possibly see that they've done it so before in the past, because I get the feeling that a lot of this could have been avoided just by showing the books. And any rookie tax pro going before the IRS would know that, hey, I need the records. I got to prove this stuff. But that's not what happened. So that's the breakdown. This is going to be an interesting case to follow. I believe that some of the things will be lost to Beyonce, so she might gain some ground on some things if she's able to substantiate her claims. But this is going to be interesting and high profile. I can't wait to see how it goes through. Let me know if you've enjoyed this, if this was helpful. Do me a favor, like and share this video, subscribe to the channel, and I'll see you next time when we break down another tax issue to help you keep more money in your pocket and build more wealth for you, yourself, and your family. Until the next time, Kamar Ellis out.